automotive in general is a little bit of a cyclical industry. So you need scale to kind of counter that. You also need scale to do justice to economies of scale, right? I mean, the bigger the guys are, it's easier to squeeze out that 1 or 2% EBITDA margin if you are operating at a higher scale.
So welcome to the Blue Circle, everyone. I think in the best interest of time, we can begin. So very happy to see the fraternity here, and hope you're all in good health and are keeping safe. And thank you very much for taking the time out and joining in today. Such a big privilege and a pleasure to reconnect with everyone, our distinguished panelists who are handpicked because of the think input and the rich experience that they bring in. And thank you to our distinguished audience for joining us. We've received 100+ registrations, most of whom are CEOs, CXOs, and senior leaders. Many of them are our members and repeat visitors to our webinars, which is very encouraging and motivates us to provide high levels of dialogue to the online channels as well. And for those of you who are new with us today, Blue Circle is the world's first sector-specific networking app for business leaders that's built in India. We currently focus on 6 sectors, which are e-mobility, energy, real estate, healthcare, logistics, and aerospace and defense. And we've just very recently added, in fact, yesterday, just added 14 new sector communities to our platform to form the Blue Circle 20. We also present socioeconomic insights, which ultimately determine the evolving complexion of the market. And along with our weekly webinar series and our digital publication, you'll be very happy to know that our recently launched Blue Circle app for leaders, it is somewhat like the sector-specific LinkedIn for senior leaders, a space to have meaningful conversations, connect with over 5,000 like-minded leaders across the globe and from India, house high-quality curated content, and also get access to business opportunities across our core sectors. So those leaders who are interested, please do join us. I will also share the link to the chat section, link to the app in the chat section, and we'll soon send out invitations to our new guests post the webinar as well. And today, as part of our investment series, we're privileged to have big minds and leading thinkers of the industry to join in for the auto community's discussion. The topic is Future of Auto Components, Where Should India Invest? In the best interest of time, I will just briefly mention the names and designations of the panelists we have with us today. We have Mr. Koushik Bhattacharyya, Executive Director, Avendus, and the chair and moderator for the session is Mr. Nitesh Gupta, partner at McKinsey. So thank you very much, sirs. Thank you very much, audience, for joining in today. I now request Mr. Gupta to please chair and moderate the session.
Thank you, Siddharth, and welcome to all those who have joined us. I see that the number is growing every minute, so it's very good to have such a large audience with us on this topic. So as Siddharth said, I'll just quickly maybe introduce myself, and then I'll invite Koushik you to introduce, and then we'll get going with the discussion. So as Siddharth said, I'm a partner based in Gurgaon with McKinsey and Company. I lead our automotive practice in India. By the way of my personal experience, almost 10 years now of working in this sector with many OEMs, tier 1 suppliers, on a variety of topics. So happy to be here and share some of our perspectives and answer hopefully some of your questions. But before we do that, Koushik, maybe just a quick introduction from your side.
Thanks, Nitesh, and thanks, Siddharth, for organizing this. Happy to be here. As an introduction, I head the industrials and manufacturing practice at Avendus. Avendus is a large investment bank headquartered in Bombay. I've been looking at the industrial space for close to 8 years now. A big part of our focus area is auto components and e-mobility, e-mobility being the hot topic and buzzword of late. So happy to be here with Nitesh and discuss some of the important aspects of what is shaping up the auto component space.
Thank you. Thank you. So as the topic says, for the discussion today, we are going to talk a little bit about future of auto components. But before we go there, I think one thing that is very, very here and now on everybody's mind in the sector is what's the demand outlook, right? What is it likely to be? To start on a little bit of a disappointing note for all of you, nobody has the crystal ball, so nobody can say for sure. But I think the world does look, I would say, relatively better for component suppliers as compared to some of the OEMs. The reason I say that is whenever we think about demand for auto component players, we think about demand in three separate, more or less independent verticals. First is, of course, what you supply to OEMs, which is linked to new vehicle sales, which, as we all know, in the past few months has been up and down quite a lot. The second source of demand is aftermarket, which provides a much more steady, large source of demand for your products. And third, rapidly growing source is exports. So I think if we look at all those three drivers of demand for the components business, let's talk about the OE demand first, right? I mean, it's of course has been very, very volatile, very hard to say where it will go. But I think assuming there is no significant surge in virus cases and so on, we believe that there is only one way to go, really, right? For across segments. And I'll give you a little bit of a view across different segments. But I think commercial vehicles probably was the hardest hit, as you all know. And therefore, if you look at the next 3-4 years from current base, the CAGR probably will be highest in that segment. Because I think now we are seeing a lot of pent-up demand coming back. Freight rates are at an all-time high. So I think at some point in time that will start translating to new vehicle purchases from large and small fleets alike. So we expect a 14 to 15% CAGR over the next 5 years, largely driven by the very, very low base that we have so far. Within commercial vehicles, of course, small commercial vehicles remains an island of growth even in the short term, driven a lot by the last mile e-commerce and so on. So commercial vehicles, I think, has been really hard hit, but hopefully will also be the fastest growing segment from here on. All the passenger cars and two-wheelers particularly, I'd say again, 4 or 5 years out from now, you should see a high single-digit CAGR anywhere between 8 to 10%. Categories have very, very different demand drivers. But again, I think base effect is what, if I was looking at some of the numbers, and I think last 2 years have been about 30% down compared to the peaks of FY19. Tractors has been a ray of hope for the industry, even amidst the crisis, and actually has been posing growth sequentially, even in FY20 and FY21. So there we expect a little bit of moderation of that, because it's also a 4 or 5 year cycle. So I think we are at the top of the cycle on farm equipment. But overall, I think OE demand from here on should only look upwards, barring 1 or 2 speed bumps, if at all. Switching to the second one, I think aftermarket has remained resilient by and large. In fact, particularly on commercial side, many fleet owners have deferred purchases of new vehicles, which has basically meant that the service and parts spent on existing vehicles has gone up. So people have spent more money on repairing existing vehicles and deferred new vehicle purchases. Particularly in categories like tires and all, we have seen actually very strong replacement demand across categories. So aftermarket, all the component players who have a good aftermarket component in their top line, I'm sure would have seen that effect also, which is that it has remained resilient. Exports, I think, again, exports is something that continues to do well. If I look at 10-year CAGRs of total automotive component exports from the country, I think we have had maybe a 15-16% CAGR over a 10-year period over the last decade. I was looking at some numbers, and it seems like FY21 total exports, automotive component exports from the country was almost close to 100,000 crores, or 30% of the turnover of the industry. So I think that's one big opportunity that suppliers and autocom players must focus on. We'll talk more about the exports potential as we go about it. But that's where we are. To summarize, I think in the next 12-24 months, we expect a lot of lot of demand resurgence. Aftermarket to continue to be resilient. OE demand should only go up from here. And exports, whoever has a significant exports position, I think that will also continue to see more tailwinds than headwinds. So I would say that the future at least looks quite bright, despite all what we have seen in the last 12, 18 months, despite all the commodity headwinds and so on. And therefore, I think, this discussion is quite timely, I would say, in that sense. So with that sort of opening thoughts, let me invite Koushik into the discussion. And I think as we saw some of the questions also that came into us, I think all of you have this question around electrification, right? How fast will it happen? Is it real, not real? What's the implication? So maybe we touch upon that topic early into the discussion. And let me invite Koushik to share his thoughts on how he sees the demand picture changing in the slightly long term, and how would electrification change the industry dynamics. Koushik, over to you.
Sure, Nitesh. So electrification is obviously a huge disruptor. It's probably a once in a century trend, and we are literally seeing that panning out every day. Every day there is news about OEs tying up with suppliers, the government bringing in new regulations to spur the growth. So it's a very, very dynamic environment. Having said that, there are two very important challenges in India for the adoption. One of them is the upfront cost of the vehicle, which plays into the price versus performance curve. And the government is trying to solve for that by offering subsidies, at least in the near term. And the second big challenge is around the charging infrastructure, which is probably a little more complicated to solve, but government is trying to do its bit, and private guys are also looking at it as an opportunity. So new, albeit small guys have come into the fray, and they are trying to solve this problem proactively. Obviously, the electrification of vehicles would have a massive repercussion on the supply chain, because in an electric vehicle, the conventional powertrain gets changed completely, and 50% of the component industry probably in India goes into the powertrain. The extent to which the component industry gets impacted obviously is dependent on the vehicular segment it caters to, because different vehicular segments are expected to adopt EVs in a very different manner. So we had covered a lot of this in one of the reports that we came out last year, but just to summarize what we had projected as a 5-year trend, now it's a 4-year trend. Across vehicular categories, we thought that the 2-wheeler and 3-wheeler categories will get electrified the fastest. The 3-wheeler category, depending on whether you are looking at a e-rick segment, which is already electrified to a very large extent, could see numbers as high as 40% of the fleet being electric by 2025, and probably 20% in the e-auto segment. In the 2-wheeler segment, we thought that 10% would be a good number to achieve by 2025. Having said that, many large entrants have kind of come in the last 6 months. People are talking about far higher numbers, but I would believe that India is also the largest ICE 2-wheeler market. So the base is very large, right? So 10% of that number is a fairly significant number in absolute terms. I think one of the projections that we made, where I thought we have been very, give me 1 minute, there's an organizational announcement, so I'll need to go on mute for a minute.
Yeah, so while we wait for Koushik to rejoin us, I just probably second what he said on the 2- and 3-wheeler likely to transition fastest. Actually, 3-wheeler probably the fastest, and then 2-wheelers. Within 2-wheelers, of course, most of the product action right now is on the scooter side. There are some launches on the e-bike side also, but our sense is scooters is what probably will lead that transition. So Koushik, handing back.
Yeah. So I was referring to our projections in the four-wheeler side, which is where we had pegged the electric fleet to be just 2% on the retail side and 20% on the fleet side, on the ride sharing and the four-wheeler fleet side. I think that is a very low number. I believe that even on the retail side, the penetration would probably inch closer towards 4 to 5%. On the LCV side, we had projected 4%. Again, we are seeing a lot of guys solve the problem on the supply side, but more importantly, seeing a lot of ecosystem players like the Amazons, big baskets, all of them, giving out LOIs almost every other fortnight to people. So we think that number could inch closer towards 7 to 8%. And finally, on the buses, there's a lot of government push. It's literally raining tenders now. So we had projected 12 to 13%, which we think we will hit. So all of that said, I think the absolute number and the opportunity in electric vehicles is very large. And that would also translate into a fair bit of component industry moving towards things that go into the electric vehicle. So it will be an important game changer in the foreseeable future.
Yeah, thank you. Thank you, Koushik. So now I think the logical sort of thought in our minds is, what does it mean for the auto components industry, right? I think, let me just sort of build on what Koushik was saying. I think component players who have huge exposure to two-wheelers and three-wheelers, I think probably are going to see the change first compared to others. Having said that, I think even in those portfolios, we are, as you heard Koushik, I mean, we are talking about 10-20% share of new vehicle sales, which basically means 80 to 90% sales continue to be ICE. So I think those markets are not going to vanish anytime soon. They are going to be there. They're going to be large. Plus, there is the added factor of replacement demand. So if the components are of the nature where there is significant replacement demand, then you have anyways a large vehicle park to cater to. So I guess we don't expect, even in those categories which are likely to electrify faster than others, we don't expect a situation where your existing capacities sort of go out of business overnight or anything like that. I think the transition will happen slowly. I think the implications are, though, more than electrification, I would say there are a couple of other things that probably have more important and more relevant implications for the component industry. I think first is just the level of electrification in the vehicle. Even if the powertrain remains conventional, I think just the amount of electronics that will go into vehicles across categories is going to go up. It is already going up and it will continue to go up. Right? I mean, if you look at heavy commercial vehicles or construction equipment, the amount of electronics that is put in a cabin today versus what it used to be 10-15 years ago is vastly different. Similarly, I think if you look at, even on the other hand, if you look at a two-wheeler or a bike, the amount of electronics there with all the digital speedometers and so on, are mobile chargers, and you name a few, but there are many more coming. So I think that is one thing that I would say that the industry needs to consider much more than the powertrain today. The second aspect also, which will rise almost in conjunction, is the amount of software that gets built into these vehicles, right? In fact, I was having a discussion with the auto OEM in China, and I was surprised to know that the OEM employs a 3,000 member software team, which was all in-house, right? And they said basically their belief, rightly or wrongly, was that what we see as the product will become commoditized, and what will create differentiation eventually is the user experience and the software that goes into it. Of course, now that could be a very, very extreme articulation of the importance of software. I'm not saying we'll get there anytime soon, but I think directionally software is going to become more and more important. Again, in components where there is potential for something like that, I think I would say that's more here and now for the industry to consider. And I think and then secondly, wherever we do see the electrification of powertrain, I think, of course, and I mean, that's not rocket science. I think certain components will start to phase out for that part of the production, and certain completely new things like motors, controllers, battery cells, of course, BMS. I think some new components come in, some old components start to go away. But I would say, barring two-wheeler and three-wheeler, I think there is still some time for others to start to worry about those. So I think it's something that I would say to keep an eye on, and consistently sort of keep thinking about what it means for your portfolio. The other 2 points on amount of electronics and amount of software, I think, is more here and now. So I'd actually focus much more on that. Okay, so I'm sure we'll have some questions on this, but we'll maybe come to those, and please feel free to share your questions towards the end. But before we go there, let me again bring in Koushik to get a little bit of the investor lens into our discussion, right? And Koushik, in your role, I'm sure you are talking to many of these investors. So what do they look at when they look at this industry and players in particular, and what factors shape their preferences? Any thoughts on that? I think would be good for the community here.
Sure. So I think investors, whether public or private, are looking at auto components as a growing sector, especially from the trough that they have come out of. However, most of the guys are looking at 3 factors and probably wanting to pick at least 2 out of these 3 parameters in anything that they invest in. I think the first one is differentiation, right? And it could manifest itself in various ways, whether it is a technological differentiation, whether it is a differentiation that is led by best-in-class costs or processes that are very, very difficult to replicate. Something like precision engineering, right, which requires extremely small tolerance level. So differentiation is a key factor, and many a times that just reflects itself in the financial metrics also. If a platform is truly differentiated, it won't be operating at a single-digit EBITDA margin. So that's one part. I think the second part is the resilience and defensibility of the business against some of the mega trends, and that is where again electrification comes in, and also some of the mega trends. Nitesh, you mentioned about electronification, right? Increasing use of software, increasing use of electronic parts per vehicle. Anyone playing into that is on a very good wicket, because the amount of electronic content per vehicle is going up every day. Part of it is driven by regulation. So BS6 has come in. Mandatorily, you need to bring in EFI, ABS, all of that is going up. But there are also things that the OEs are giving for customer comfort. Some controllers, some electronic components that add to the user comfort. It's becoming an important thing. So anything to do with that is good. Things which are completely devoid of any EV risk, interiors, parts which go into the non-powertrain components are relatively more defensible. I think so. Defensibility is the second factor, and I think the third factor that investors look at is scale, and that's become more pertinent because of the environment that we have come out of. which is where many of the smaller guys faced a lot of difficulty in battling the cyclicality of the industry itself. So I think automotive in general is a little bit of a cyclical industry. So you need scale to kind of counter that. You also need scale to do justice to economies of scale, right? I mean, the bigger the guys are, it's easier to squeeze out that 1 or 2% EBITDA margin if you are operating at a higher scale. And the third thing that scale gives you is the ability to expand laterally, right? I mean, it just enables you to create a corpus and get into a new space which could be slightly different from what you have been doing. I think these are the three factors that investors look at favorably: differentiation, defensibility, and scale. When it comes to
you summarized it very well, Koushik. In fact, you reminded me of an analysis we did 2 years ago where we looked at auto component industry globally, not just in India, and we said which are the companies that have delivered superior shareholder returns over a 10-year period. And the findings were very, very consistent with what you said, because I think in McKinsey, we classify a few component players as what we call make to print component companies, right? Where the design is owned by the OEM. And there, I think in the earlier decade, manufacturing efficiency, how good were you with your manufacturing practices would determine whether you are, how successful you are. And then that translates to building scale over time. So for any of our audience today, if you are in components like castings or forgings or anything like that, I think scale becomes important.
Yes.
But all of these companies consistently made lesser returns compared to companies that had some technology or some what we call black box companies. Because your cost structures are not that transparent. Typically alternatives are not available that easily, so they are able to get a premium. And I think that is probably going to be an evergreen insight for this industry, that you have to continue to move up the technology curve, otherwise you get costed out and negotiated out in the market in a sense. So I fully resonate with that. Okay, so maybe a last thought before we take the questions is I just wanted to also lay out what I call a 7-point agenda for Indian automotive industry, particularly. 7-part agenda covering some of the aspects of managing current volatility in demand. How do you manage operations in the short term, but also how do you prepare for the long term and future-proof yourself, right? So I think and I'll just go in some order on that. But I think the first and foremost opportunity in the coming decade for the industry is to really tap into the export potential that India presents. I think there are global tailwinds now. The industry has already done quite well, but I think there are more tailwinds to push this more. In fact, if you look at the last 5 years, India and Vietnam on a global scale have been the fastest growing exporters of auto components. So in a way, we are already doing it. I think the imperative of the next decade is that can we do it even more? Can we do it faster? And I think certain component categories which will be quite amenable, where we believe India is competitively advantaged vis-a-vis some of the other exporters, are things like fuel and exhaust system components, engine electrical components, brakes and clutches, fasteners, bearings. Of course, China has been a big exporter in all of these, but I think that dynamic is changing slowly but surely. I think they are becoming, I think, relatively speaking, less cost competitive. And I think in the Indian industry has always been very, very good on quality. So suppliers who have good quality standards typically taste more success in exports. So I think that's the first big imperative, I think, for the industry that we must go out and win. I think second is also maximizing the aftermarket potential. It's, in my experience of over a decade in the sector and having interacted with many, many suppliers and component players, it's amazing how that potential is not fully tapped into. I think suppliers and auto component players naturally have a tendency to focus much more on OE business. But let me again underline, I think this is a revenue stream that de-risks your top line, even if the OE sales go a little bit up and down. And aftermarket is changing rapidly in itself, right? I think new business models are coming in. People are leveraging digital. Some of the companies that I'm sure you all have heard of are Go Mechanic, Service Mandi, and so on. So people are actually coming up with digital service-led propositions, and part suppliers just again become like a hardware supplier to this entire solution that somebody is providing. So I think, again, depending on what categories different companies are in, but I think this could be a big opportunity as well. And aftermarket is in itself quite large and will continue to grow. So that's the second. Third, I would say, is proactively look for diversification in your portfolios. Again, given the way the OEM structure is in many of the segments, I see many component players are largely dependent on one or two OEMs. In fact, I've seen many who have more than 70% of their revenues coming from just one OEM. I think it's imperative for you to start to broaden because it allows for really to build not just commercial capabilities on the front end, because then you are going and scouting for new business with new OEMs and so on, but it also pushes the component industry to be operationally even more efficient. All right. So I think that's something I would say is the third imperative. I think fourth is, are you sweating your capacity fully today, right? In amidst the demand uncertainty that exists today, incurring a lot of capex to augment your production capacities is probably, I think, a more traditional way of approaching it, but really leveraging Industry 4.0, and we have seen 10 to 20% throughput enhancement depending on your starting point. But I think leveraging state of the art on technology to just make sure that your assets are getting leveraged fully and you are not leaving anything before you come to a conclusion of incurring more capex. So that's number 4. I think fifth is actually building a culture of cost management. I think everybody is paying with the commodity prices and where they are, and at least there is no line of sight to any significant easing. So I think it's going to stay here with us for some more months. So how do you maximize internal accruals? How do you build a culture of cost management? How do you train your people? How do you use some of the cutting edge tools? I think that's the fifth imperative, which will also be important to be competitive eventually, not just in India, but globally. I think sixth, I would say, for component players who have healthy balance sheets, I think be proactively on the lookout for strategic M&A. It could be in India. It could help you build scale, to what Koushik's earlier point, because scale gives resilience. It could be beyond India to get you access to some technology, which again sort of lifts the overall value creation potential from the company. It could give you access to OEMs in other markets, because many a times we come across assets in international markets who are already enrolled with some OEMs, and acquisition there can give you a direct entry into those OEMs. So I think there is something to be done on strategic M&A as the sixth imperative. And last, I would say, is some of you also have an opportunity to look beyond core automotive sector. And I think railways is one area. Aerospace and defense is another upcoming area. So not all suppliers can, I think, go there, but many can. So I think I would also urge you all to look beyond automotive a little bit, which basically gives you scale as well as diversification, right? So those are at least the 7 important imperatives to win in the next decade or so. And I'd just like to sort of round out by saying, going back to my first point, I think, demand more or less over a 10-year period, you'll probably see very, very good growth on all the 3 drivers of demand. I think the imperative is how do you prepare for that, both organically and inorganically. So let me pause here, and Koushik, if you have any closing thoughts, and then we can try and take some questions. I think I see some are already trickling in, but we can go there.
No, I think well summarized, Nitesh. Only one point that I would like to add is M&A as a tool has been very, very well used by the West, right? I mean, for them, it's not a discretionary activity. It's as important as organic growth. There was a phase in our auto component evolution where people were looking out and buying assets in Europe, buying assets in the US to get access to technology or differentiated manufacturing. I think that is a very important tool, especially when people, as people grow larger. Some of the assets in West are facing cost pressures. They are distressed. So it's a great opportunity to just put one layer above the export angle that you had mentioned at the beginning of the 7-point agenda, Nitesh. So that's one. And the second point is around diversification organically as well. Some of the areas outside of automotive essentially use the same skill sets that an auto component manufacturer would be using, which is good engineering, good control and manufacturing costs, and some of them are actually higher growth areas than automotive. For example, defense. It's a great example. It's a very differentiated space. The entry barriers are higher, and some of the higher end auto component guys can actually graduate to that. So that's a great point, and people should actively think about just expanding the horizon and looking at some of these areas.
Thank you. So I see we have a few questions on the chat already, but maybe let me just open up the discussion and see if somebody would like to share a question or any reaction to the discussion so far live. And if not, we can of course always go back to the questions we have on the chat. But let me just open up and Siddharth, I hope technically it's possible for people to just sort of speak up and share some reactions or questions.
Sure, absolutely. So they can choose to raise their hands, and so once you raise your hand, then we can always allow you to speak. But otherwise, you can always please feel free to post the questions in the chat box also. We've received some, which Mr. Gupta, you can choose to take from here.
Yeah. Maybe I'll just wait to see if somebody is wanting to share any reaction with us live. Otherwise, we'll just go to the questions we have here. Okay. So probably we'll just take these questions and then we'll again see if there are any reactions to the discussion. So I'm going to, a question here, the first one that I see on the list is, what is the probability of meeting charging infrastructure with growth in EV productions in the next 5 years? Whether charging infra will be a deterrent for EV productions? So I think absolutely, I think it is one of the factors that will determine transition to EVs. In fact, we feel probably this will be an even bigger factor than the TCO. I think with the way battery costs are evolving, I think TCO we already are positive in a few segments, and I'm sure we'll be in another 2-3 years positive in a few more segments. But charging infrastructure really is the big challenge. I think what complicates it even more is that it's not clear who's responsible for it, right? I mean, is the OEM responsible for it? Is the government responsible for it? Is someone else responsible for it? What's the best model, and so on, right? I mean, in two-wheeler context, there are even discussions around, is charging the right way or is swapping possible, and so on and so forth. So I think there are two levels of complication for charging infrastructure. A, the end state is not clear, and B, who will take the country to their end state is also not clear. So it will be a big deterrent. And therefore, any EV projections we make or we discuss, I think it becomes a determining factor. Charging infrastructure is always a determining factor. But Koushik, you guys did a full report on this. So any thoughts on this particular point?
Yeah. So see, charging infrastructure is a classic chicken and egg problem, right? I mean, unless you put that up, people are wary of buying the vehicles, and if there are too few vehicles, then you can't spread the charging infrastructure enough. So the guy who's putting it up won't be able to make the IRRs. Ideally, I would have liked to see the government, put a larger corpus and be more proactive here, because this is really a very, very important enabler. They have tried to address it partially in FAME 2. But what we are also seeing is that at least the larger guys who have the pockets to kind of tackle this problem are taking a much more holistic approach, like people in the West. I mean, Tesla has its own charger network, right? Tata Motors is talking about the same, right? Someone like Ashok Leyland could replicate it on the bus side. So people are talking about it, and we are seeing a lot of smaller guys, trying to come up with innovative solutions, trying to come up with tech as an enabler around this. So hopefully we sort it out. Otherwise, this really has the potential to be a bottleneck for EV adoption in India.
Yeah. Okay. The next one we have is from Mr. Rajesh Pawar, Director Micro Innotech India, and he says, "What do you see as future of engine components? I feel EV will be a big failure in India." So I think, as we spoke, best case projections, even in segments where TCO is favorable, is about 10-20% of new vehicle sales. So 80-90% will continue on the traditional powertrain. So I think the transition that we are envisioning is very, very long term. In fact, on the commercial vehicle side, it's not even clear whether we'll go down the EV route. Maybe hydrogen will. At least today, it seems like hydrogen offers more potential as an alternative fuel, in which case the powertrain doesn't change much, really. On whether EV will be a success or a failure, I think it's very, very. I would say the odds are more in favor of it being a successful transition rather than not. What remains to be seen is, of course, how much time it takes and which segments go first and so on. But I think with the way the global industry is going, I don't think India will have an option to not go there eventually. It's only a matter of time.
I'll be a little more emphatic and say that it's going to be a success, right? I mean, to say that it will be a big failure. See, you will have to realize, Mr. Pawar, that we are not talking about a 5-year horizon. We are talking about a 50-year horizon. So while the adoption could be a 10 to 20% in 5 years, if you extrapolate it to 10, it in many of the categories it will be not a 50%. So in the 5th year, if you're not thinking about, how to battle the problem of the conventional ICE vehicles, getting wiped out, then there's a little bit of an existential threat to the business model. But obviously, in the 5-year horizon, you will still not face the heat so much.
Thank you. Moving to the next one, there is a question from Mr. Krishnan R, Operations Head, Woods Diecast, who says, "What is the future of gravity die-cast aluminum parts?" I think pretty much I would say the answer is on the similar lines. I think it's not going away anywhere soon. Also, to the best of my understanding, GDC is largely going to engine parts. So again, not going away anytime soon is probably what I'd say to that. Okay, moving on to the next one. There is a question from Mr. Gautam Chabra, Preferred Square Analytics, who says, "Will the dependence for semiconductors and technology for India automakers on China, Taiwan, US?" I guess the question is, will it go down or go up is what I'm inferring. EV will obviously boom, but without the EV infra push by the government. I think that we discussed. The second part, I think we discussed. On the first one, Koushik, again, I'll invite you, but my sense is we'll continue to be dependent on these countries because semiconductor manufacturing is a very, very difficult part of the value chain, requires a lot of capex, technology changes quite frequently. So probably we'll continue to be net importers. But Koushik, do you see anything different on that?
I don't see semiconductors coming to India anytime soon in a big way, but the point here is that the crisis that we have seen over the past few months is a little anomalous. It's probably going to get resolved. As you mentioned, Nitesh, it is a very high capex, long lead time industry. So if something comes up and someone tries to address it by putting in capex, it takes a minimum of a year or more, right, to address it. So we are in the middle of a situation where people are trying to address it, and maybe 18 to 24 months down the line, the situation improves a lot. And we are not even talking about, semiconductor being a bottleneck to production, but purely from the point of view of people being able to bring technology and put such kind of capex, I don't see that happening in India anytime soon. Will continue to be dependent on some of these countries.
Yeah. Then I think there is another question from Mr. Ashok Kumar, who's also, I think we touched upon this a little bit in our discussion, which is with EV production likely to make major inroads, what will be the future of traditional auto components manufacturers? I think we discussed that again very quickly to re-summarize that. I think there are many more opportunities to continue to grow, and therefore I think suppliers need to also a little bit reimagine their business, not just sort of stay focused or on one type of components, and proactively diversify is what I would say. Then we have a question from Mr. Mukesh Nagar, GM Marketing, Depot Power Transmission. I think future of ICE, hybrid or EV. I think hybrid is probably not going to be big. I think we'll just transition to EV whenever we do, in whichever segments we do. Next, BS norms, not clear. I think BS6 is where the world is by and large. So, and I think the government's approach has been, I think, one of a fast follower approach. So, I think with the transitions to EV now, as the next technological disruption for the industry, I think emission norms will probably get taken care of with that. So I don't know when we'll see a BS7 or a BS8, and I hope for the sake of industry that it's not anytime soon.
Yeah,
I think BS6 itself has been a major transition.
I don't think anyone wants you to give out a year here. It's going to spook everyone out after.
Yeah.
Massive capex. Yeah.
Is it possible to sell directly in aftermarket bypassing OEM? I think that answer is very much yes, definitely. In fact, there were many discussions on this topic. As you would imagine, I think there is nothing that can really stop a company from selling anywhere as per the laws of the land. So, and I think we have so many examples of auto component suppliers doing that. So I think that is an emphatic yes. Where do you see commodities moving ahead beyond 2022? That I think is an interesting question. I think most of the commodities, be it steel, copper, rubber, I think we have seen a little bit of a flattening in the last 2-3 months. So our hope is that it has really peaked. And we don't see a lot of upside from here. I think I made a remark earlier in this discussion that at least next 5-6 months also, we don't see a significant easing as well. So that's my view, but again, it's very hard to predict. It's very hard to predict. You have one supply shock or a demand shock somewhere, and everything goes for a toss. Koushik, do you guys track this a little bit?
See, we look at it very outside in, right? It's very difficult to predict even for guys, insiders who are dealing with this every day. Again, echo your thoughts, Nitesh. It's flattened, and this I'm not just talking about, metal commodities that go more in automotive components, but also things like plastics, etc. They pretty much saw a peak in Q2 and have started, coming down. Hopefully, the spikes are lesser in the next few quarters. But honestly, very difficult to predict. I don't have a very specific view.
Yeah. Okay, the next question we have is from Mr. Ramesh Vaidya. For electrical mobility, copper availability and cost may be the biggest challenge apart from battery technology.
Good evening, everyone. Please head.
So, yeah, I mean, I think you're right, but the TCO and the upfront cost, I'm not sure how much a 10-20% movement in copper will change the TCO equation. Probably not. I think battery will still remain the biggest determinant of upfront price. And also, to the best of my understanding, of course, copper cost is now has gone up quite a bit. But availability, I don't think has been a challenge. I mean, of course, cost is a challenge, but availability, at least to the best of my understanding, has not been a challenge. But I don't know if you are seeing something else in the market practically. Then moving forward, Mr. Vidyadhar, he says Mr. Gadkari is insisting on flex engine mandatory in the next 6 months. I'm sure IC will be there for a very long time. Why we should get stressed up on EV? No, you are right. I think there is no reason to get stressed up for sure. And as I said, it's something to keep your eye on. Really depends on your portfolio. I mean, if you have a very diversified portfolio, which also has a replacement demand, I think there are not yet reasons to get stressed up, but any transition creates new sets of opportunities. So there could be something for you that you could actually go and do in over and above what you are doing today. So I would say take an opportunistic view to it, and maybe there is something more that can come in. Koushik, I don't know if you want to take the next one.
Sure.
Ramanath Nayak. Yeah.
Yeah. So just like hydrogen fuel cells, there are lots of other technologies that are being innovated around, starting from super capacitor based batteries to aluminium fuel cells to eventually solid state some point of time into the distant future. So my thoughts around hydrogen fuel cell is that it's not there to kind of play a role in the next 5 years, probably in the EV ecosystem, right? It's very difficult to make a case for aluminium fuel cell at this level of penetration and at this level of costs. People are looking at it. I know of a couple of players who are looking at it very aggressively. Probably the first few use cases here would be the heavy commercial vehicles, buses, etc. But just given the costs of creating the entire hydrogen fuel economy, I think in a place like India, where most people are very, very conscious of the TCO and the upfront cost, more importantly, it's going to be challenging in the next 3 to 5 years.
Yeah. Okay, moving on to the next one. Mr. Rahul asks, is it strategically right to become Indian distributor of MNC electronic controller parts which will go in EV? Okay. See, my first thought is a lot of OEMs would be buying these motors and controllers, would be interfacing directly with the suppliers. Many of them already have global offices for sourcing. So I'd be surprised if if any OEM who's operating at scale will be interacting with a distributor. They'll probably be going directly to the suppliers. Some are even talking about strategic partnerships and so on. So top of my mind, probably doesn't seem like a very good idea.
Also, what's happening is in many of the countries, the tier ones are aggregating any differentiated parts where they might not be able to supply by manufacturing. So, I mean, effectively, the role that the distributor mentioned here is supposed to play will be played by a tier one if there's something that's very differentiated that they can't have access to directly.
Yeah. Okay, then Mr. Ramesh Tausif says, kindly provide few good OEM for EV battery and their efforts to scale up productions, including any FDI in this domain. On the lithium-ion battery, I think cell manufacturing is unlikely to be done in India anytime soon. But a lot of battery assembly is likely to happen. I am not current on who is already setting up capacity or not. I don't know, Koushik, if you have any ideas on that. But
See, the conventional battery guys are looking at this, aggressively, including Excite through their Excite Launch entity.
Yeah.
Amar Raja has just invested into a advanced battery tech company called Log9. The thought is to probably play this game slightly more actively. And then there are pack assemblers like Exicom who play into the space. But on the sell side, people are talking about it. We will need a large name to come in meaningfully here. The Tatas have been talking about it at some point in time. Adani spoke about it, but we will see how that pans out. But on the pack side, there are 3 or 4 guys, trying to build the packs and layer up the BMS on top of that. So that's happening.
Yeah. Okay, I have to admit the next question I don't have really a perspective on, but just for the benefit of the group, the question is who will win between BLDC motors or axial flux motors or SRM magnet sleeve motors? At least I don't have a view on that. Koushik, I don't.
Neither do I.
Okay. So let's go to the last one then. How do we forecast the vehicle scrappage policy and its impact on the components industry, especially aftermarket, from Mr. Irfan Hanif, Director AM FI Group. Koushik, any thoughts on this, or you'd like me to?
Why don't you go first? I'll just collect my thoughts on the scrappage policy. I think been in the works for a long time.
Yeah. No, I think see, the scrappage policy will definitely affect the aftermarket in a negative way because at least in the commercial vehicle segment, we saw so many a significant part of the fleets which was much older, but people sort of continue to use that. So aftermarket probably will affect a little bit for sure once it fully kicks in. But again, I think it opens up a completely new area for the industry, which is how do you maximize the value out of a vehicle that has to be scrapped. And in fact, we were having a discussion on this topic, and it's not that simple. How do you maximize the value? How do you scrap it in a way that you maximize that value? So I expect a lot of action in that area now with a formal scrappage policy in place. But I do think aftermarket, it will have a little bit of a negative impact. Not too much, but a little bit. Yes, for sure.
I think in general for the auto components industry, it's a positive move. I think this specifically refers to aftermarket, but it also mentions how it's going to impact the auto components industry. I think in general, the thinking that if implemented properly, it will have a positive impact on the auto component space.
Yeah, because whatever is good for new vehicle sales is good for
Correct. Exactly.
And that has been the thumb of rule, but no, you are right. Okay, let me see if we have any other question. Probably not, unless there are any reactions again or any other questions that the group has that they would like to share with us. We can take those, or if not, then again, thanks for your time, and I hope this was useful. This discussion was useful, and we'll hopefully get a chance to interact with some of you, if not all of you, again.
Wonderful. So unless you would like to summarize anything, then I would just quickly close this. Sure.
No, I think maybe the parting thought is that I think the next decade is going to be quite wonderful, really, for the industry, and I think we are on the cusp of something big, putting India more and more on the global map for this industry. So I think all the participants, I would urge you to move ahead with confidence, take some bold steps wherever you are, and I think we have actually many opportunities to, as an industry, to outperform really.
Sure. Mr. Bhattacharyya, would you like to add your closing remarks to this?
Sure. I mean, I completely concur with Nitesh. I think it's even more pertinent to think positively, because we have come off a little bit of a rough patch. So when you have seen a rough patch, it's difficult for you to then deploy capital, make some of the bolder decisions with respect to growth. But I see all the levers playing out, including domestic demand, export focus, us being a manufacturing hub, some of the people getting into peripheral areas using the same skill sets. I see all of them playing out with some of the clients and some of the players I interact with. So I'm positive that this is going to be a great next few years for the industry.
No, wonderful. So thanks so much for that close, and thank you so much, sir. Such an insightful and engaging conversation. I've been hooked throughout, and we've all really enjoyed listening to you both. And really a lot of nuggets have been taken on with these today's interaction. And also thank you to our leaders in the audience for also joining us, for staying till the end, and for always sharing excellent questions. Along with our weekly webinars and our publication, we're taking all these discussions and conversations, and also B2B opportunities will be exchanged right on the exclusive community app, which is curated for senior leaders across our 20 sectors now. So whether you would like to engage with us on the platform, leaders are invited to join all our communities. So thank you very much, sirs, once again. We look forward to having more such discussions in the future, and please do stay safe. Thank you.
Thanks a lot, Siddharth.
Thank you.
Thank you, Nitesh.
Thanks so much.
Thank you, Koushik.